right, this is going to be a supply and demand stock analysis for company AT&T, listed ticker T. Keep in mind, I think that this can be a very useful tactic, especially for newer traders entering the market that are just getting whipsawed with all the volatility, especially trading on a very small time frame. We like to get the aerial view looking at the monthly chart all the way down to the daily. I do use 3 indicators, although if you are a supply and demand trader, you do not have to use any. I do use the 20 SMA, which is the purple line. The red line is the 200 SMA. And then I do use the CCI indicator either on the 25 or the 30 period. Now keep in mind, as supply and demand traders, we do like to go off of 4 main patterns in the market on any time frame. But personally for me, I do like using anything on the daily and above. These 4 main patterns do include the drop-based rally, the rally-based drop, the drop-based drop, and the rally-based rally. Very simple. You could take a picture of this, save it, or I could send it to you if you would like me to email it. Just keep in mind, looking at this chart right now, you could pause the video, you can look around, and you could identify the drop-based rally, the rally-based drop, the drop-based drop, and the rally-based rally. You could notice these rectangular boxes up on the chart here represent my bottom and top end zone. As a supply and demand trader, I do like to play from bottom to top end zone, avoiding any hype on a chart and waiting for those retracements back to either a fresh level of demand or a fresh level of supply. Monthly chart, every single candlestick here representing 1 month of trading on the chart for ticker T. Right off the bat, we notice where are we in comparison to the moving averages. Are we around in the middle? Are we back to an area that happens to be one of the main 4, just like this, a drop-based rally? This is the first time that we are back here. That level takes us to 2010, so just about a decade later. Market is not moved by Robin Hooders' Wall Street bets. It is strictly algos and machines that are running off past data in the market, and I think it could be very useful for a lot of new traders if they take out a lot of the noise and just look at the larger time frame. Where are we in comparison to the moving averages? Keep in mind that the 20 MA is always home base. You can get away from the 20, but you can't stay away. The 200 is mama. They are both lagging indicators, so keep that in mind, both lagging. What are we currently in right now on ticker T? We are currently into a drop base phase. We know that as supply and demand traders, only 2 things can come out of this, whether that's a rally or a drop. But we are at demand here. I noticed that my CCI indicator is now making higher lows, currently building a higher low above the negative 100 line, showing me that momentum to the downside is slowing. We actually printed a lower low in the chart while the CCI was making a higher low on the monthly time frame. This rectangular box on the top up here is representing my top end zone being supply. This would be the target to be traded to. Keep in mind that ticker T is a very slow mover. It's a slug, reminds me of Pfizer, which I will never trade again. That it has an ATR on T of only 55 cents, right? So it's a slow mover. It's not one that you're going to want to look to go out and get some weeklies out of the monies on, right? You're either playing equity, as it's a dividend payer, 6.5%, or you're buying the leaps on the options. As I move down to the weekly chart, we're dissecting this a little more. We're getting that aerial view still, but getting more data that we just couldn't see there on the monthly time frame. You'll notice my rectangular boxes are still here. Where are we? We're still sitting back at that drop base rally, right? First time back since 2010, just a decade later. Where's the 200 MA? 200 MA is all the way up here at 33 bucks, just about 30-40% to our top target of the rally base drop. I do like how it kind of has this inverted head and shoulders printing on here, but I don't really like to play those patterns in the market overall. Even down to the weekly chart, you can notice that the CCI is still building higher lows and just at that 100 line. 20 MA is sloping up as we do have room to supply above that has not been retraced to since that move. Also to the 200 MA being mama at 33 bucks. We see here on the daily chart, one of my most favorite patterns is we like to see that rising 20 MA above a flat 200. For me, I like that as an indication that smart money's getting in. Institutions doesn't always mean that, but that's the way I like to look at it. We're above all moving averages. CCI is making higher lows, holding above the 0 line and just at the positive 100 with wide open space. A term that you should all get familiar with in the market is wide open space. What do I mean by that? We have a lot of room to the upside here As we're sitting on the daily, if I scroll out, we're back to demand, right? First time back, all the way back to 2010 from the cluster here, right? Remember, drop, base, rally, one of the main four. We're in the same pattern here, a drop, base. Two things can come out of this, either a rally or a drop. I have some notes written up here that I would like to share with you guys. For ticker T, you can see At&T, long idea, leaps on options or just straight equity. Now we notice here that the options for January of 2022, really the only ones that I'd be interested in, as it is a slow mover with an ATR of 55 cents, gives us just under about 10 months of time. Implied volatility is something that I look at very heavily. I don't like to buy options that have implieds over 40%, so this is right in my ballpark of a 21% implied. Typically never really see implieds move much lower than that, so I know on any sort of impulsive move that the option won't really decay and hurt my profit due to the implied moving lower. If anything, the implied will go up in value, causing the value of the option to go up as well. The at the money 30 calls, those are the ones that I'm currently in. I'm interested in buying more. What is the theta? Theta obviously is just the time decay. It's less than a penny, nothing that we really have to worry about right now. Delta is 53 cents, so for every dollar that every dollar that the stock will move here on At&T, the option will either gain or lose about 53 cents, being about 35% of the overall price for the option right now. The gamma is 8 cents, so for every dollar that we move higher into the money, we will add 8 cents plus to the delta move. And the vega is 10 cents. I think that this could be beneficial if T starts getting some volatility towards it, really starts having some green days with a lot wider range of its ATR being 55 cents. I think that Vega could really add onto the implied, of course, as we see that increase over time. So all the variables are there for me personally, what I like to look for on the options. But just keep in mind, it's a slow mover. Personally, I don't like really playing too slow of movers, as I'd rather park my money somewhere else. But this does fit to a lot of criteria for a play that I would like for a leap. Non-stressful trade. You're not trading on a 5-minute chart, 1-minute chart, just getting wicked out. Equity, as simple as that. You just buy the shares. It's 6.5% dividend. Definitely one that you could just have in your long-term portfolio. Long-term, of course. I am not a fundamentalist. I'm straight technicals. I don't look at news. I don't believe that news moves any stocks at all whatsoever. I think it is just nothing more than smokescreen and mirrors. And then once you realize that over time in the market and you stick strictly to technicals, it will become a lot simpler. Supply and demand trading, once again, I'm a technical trader, no fundamentals. If you like the fundamentals, you're talking to the wrong guy. I guess you could say this fits into a 5G play, but that's all I'm going to say about that. Indicators, once again, I only use 3, my 20, purple line, my 200, which is the red line, and the CCI. I either use a 25 or a 30 period. Typically, I like to switch back and forth just to see the difference. Daily, weekly, and monthly charts, I think this could be really beneficial to any new traders that might be listening to this right now that just tend to get wicked out on a 1-minute, 5-minute chart. I think that the approach to the market, especially right now, being a swing trader, trading strictly supply and demand and balance, taking out really any hype news, any bullshit that's in the market, you could really have some non-stressful trades on your hands if you're willing to stay patient and buy time. I'm going to show you guys an example here of Hewlett-Packard, which you could say is another 5G play. Very similar chart, if not the same, to ticker T. This is Hewlett-Packard. This was a play that we had back in last year, which has retraced back to its top end zone. Same exact thing, supply and demand imbalance. Hewlett-Packard has sold off from $17.50 all the way back to $7.50, which happens to be what? The origin of the impulsive move. Has price ever been back here up until now? No, it has not. That's fresh demand. I want to go long. It bases, it clusters, recaptures the 20 on the weekly, room to the 200 above. It's coming to mama. Another slow mover, but leaps. You buy time, and you should be okay. Someone just dropped something. Daily chart, same exact story as At&T. 20 to slope above a flat 200 with wide open space to supply above. I find it interesting that not too many people tend to be interested in charts like this overall until they are close back to their top end zone, which is the main reason as to why traders end up chasing, following the FOMO, and getting in on the move after it has already happened. Not financial advice, just strictly education here. Don't go out and take this trade, take it on your own risk. Just a long idea. If you're interested in hearing more about supply and demand imbalance trading, specifically on options on the larger time frame, then I will throw my website link in the description. If you'd like, I'll put my email in there. You could reach out to me. I don't bite. You could sign up for a free week trial. Just a name and email should do it. No BS, no funny business, no credit card, no debit card. Just a name and email. You get access to the streams every single day, Monday to Friday. Small caps, options, penny stocks. Good information. Thank you for your time. Appreciate it. Talk to you soon. Bye.